Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 12th of May 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So it's a pleasure to be here today. We will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll cover the top trades of the week, live market commentary, trading ideas for the week ahead, and of course we'll be answering any questions that you have throughout the session as well. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, and of course, it's a pleasure to be here on FX Street today as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is at www.thegoldandsilverclub.com. Now, I want to move over and bring everybody up to speed. If you have missed some of our previous sessions, we'll cover just with you the overall fundamentals. We'll also cover the technicals with you today as well. And the first point I want to have a look at here is the significant inflows that we've continued to see into the commodity markets. We've seen hedge funds maintaining net long positions above 1 million lots for a second week, with strong buying of gold, of soybeans and sugar. We've seen breakouts actually this week on both soybeans and sugar, breaking out towards their 2016 highs. And we've continued to see strong inflows into the softs, the grains, the metals, and the energies. So it's very important just to know in terms of where the institutional money, the investors, and also the hedge funds are positioning themselves at the moment. We saw gold net long positions, they neared 2011 all-time record high into the close last Friday. We saw gold net long positions jump by 27%. So funds are owning 23.4 million ounces, and it's getting very close to the 2011 all-time record high for investment demand. And that was back when we saw gold break out to the 1900s. Okay, so it's very important to see where we are in the context of managed money positions at the moment in the markets. Now, soybeans has seen an incredible surge over the course of this week. Soybeans are actually currently one of the top performing commodities of this year. We were up on the close yesterday over 26% year to date. So soybeans is absolutely a market you want to have on your radar at the moment. Hedge funds, they expect more gains ahead. We've seen increased net long positions to a massive 167,554 lots. So it's the highest level on record since April 2014. And with that, we saw some large breakouts over the course of this week, breaking actually out to the 2016 highs so far this year. So with that said, I'm going to move over to the charts here. I'm going to get straight into it today, and we'll go over, in fact, well, the first market we'll have a look at here will in fact be soybeans, because we did see some incredible gains in this market over the course of this week. So you can see here, we've finally broken through a major level of resistance. Soybeans toyed with this level on a lot of occasions throughout the last month. We continued to test the 1,035 level. We had several false breaks of that level, which quickly retraced. But finally, this Tuesday, we saw a breakout above that level and significant follow through. If you have a look at the candle here on soybeans, the highest to the low here, it's moved over 670 points, which has been one of the biggest candles or one-day moves here on soybeans in 2 years. And you'll see again from a lot of the investment demand and the institutional demand, hedge funds entering into this position in a big way, as represented by the COT reports. As of the close on Friday last week, we saw that the commitment of traders, we saw significant inflows into this market. And with that, we've seen a really decent breakout to the upside. Now, on Tuesday, the USDA did come out with their report that the world and US soybean supplies showed that it will be tighter than expected due to reduced harvest in South America and rising global demand. The US Agriculture Department said on Tuesday. So we saw the USDA, they cut their outlook for Argentine soy production by 2.5 million tons following heavy rains that damaged crops in that key exporter. It also cut its estimates for Brazil's harvest by 1 million tons, and it lowered its corn production forecast for both countries. And with that, we saw breakouts on corn and also breakouts on soybeans. So let me just show you the overall structure on this market on the higher time frame. So if you have a look at this on the weekly chart, soybeans has really managed to build a very strong base over 2016 so far. So first of all, we broke above this major high around the 900 psychological resistance, which was previous support going back to 2014. So we broke and closed above that level over the month of March and April. Continue to follow through a lot of clean air after we broke out above that key resistance zone, and we've followed through all the way up to 1035 to 1050 level. And now just this week, we're really starting to clear again significant levels of resistance. The next major swing high to take out being at 2014 high here, sitting around 1085. If we do take out that level, there's a lot of clean air here for soybeans to continue the runaway move. Remember, up over 27% so far this year on soybeans. We've seen incredible inflows into this market. By the end of the first quarter this year, gold was the best performing commodity, up 16%. So soybeans has now taken over that as the best performing commodity so far this year. So absolutely have soybeans on your radar. Another market which I do like at the moment for potentially more upside, especially coming off the back of the USDA reports on Tuesday as well. We've seen additional breakout to the upside on that report. We've come down for a test of some key moving averages. With corn, we've now broken out of a major consolidation here, and it's building up some nice pressure at this zone around the 380 level at the moment. I'm looking for a pop above the highs from Tuesday's USDA report and essentially some good follow through. You can see we're starting to develop a bit of a pennant formation here on the chart as well. So if we can just build a little bit more pressure here to the upside and essentially break out above this resistance zone. I'm also looking very closely at corn here for additional positions. So I would recommend having a look at that market as well if you trade the grains. Wheat at the moment, the USDA report wasn't so favorable actually for the wheat market here. So we've had a surplus of bushels, and we've seen increased supply in this market. So we didn't really get such a heavy bounce to the upside, more so on corn and also soybeans earlier on in the week. But we're sitting around a key level of support, which is at the 450 zone right now. So I'm continuing to monitor wheat to see whether we will get some investment demand now that it's come down back down to the 2016 lows. We could see again just traders getting into this, investors finding value at these levels. So we're also watching out to see if we will find some support around these key zones. Now, moving over to coffee. Coffee has also had a lovely move over the last week. It came down, retested a major level of previous resistance turn support, which is sitting at the 118 level. It's quite a critical zone for coffee to hold last week. It did hold on to that level. It produced a rejection candle. What we were looking for in the short term was essentially a break and close above the high here at this support zone. We continue to get that. And over the last week, we've followed through into a V-shaped reversal pattern as the market has essentially managed to retrace here all of the losses that it had previously. It's fully retraced, and we're back at key resistance again, sitting around the 130 zone. So essentially, we're starting to develop certainly a V-shaped reversal pattern, a neckline overhead at the 127 to 130 zone. If we can break above that, we've again got quite a lot of clean air here for coffee to return to its highs from earlier on in the year over March. So also very closely watching coffee. Now we're moving over to the precious metals, and in order to really give you more detail on the precious metals, we need to have a look at the US dollar index and where that is sat at the moment. So you might recall last week we were looking at the US dollar index, and we were looking at the potential for the US dollar index to continue the follow through and come up to this major area of resistance, which is sitting at currently at 94. Okay, we've come up to that key level. You've got quite a few, in terms of the technicals, you've got quite a few resistance zones at this level. With the COT reports, we've continued to see investment demand for additional sell short positions on this market, which is interesting. So it's really the first time in over a year that we've seen significant traders and investors, institutions, hedge funds starting to position themselves for a sell short on the US dollar index. And we have seen here breaking through major support over the month of April. We've retraced over the last week, but we've essentially come to a critical zone here. If the US dollar cannot follow through above 94 and break out above this zone over the next couple of days as we head into next week, it's likely to roll over again and come back down to the lower end of its trend channel here. So you can see you've got quite key overhead resistance. We've also got a horizontal level of resistance here as well. And I would anticipate that if we were to break below yesterday's low, we could start to slowly roll over, and that will lend more support to the commodities, which of course are priced in US dollars. So a weak US dollar provides more stimulus to commodities. But on the flip side of that, a strong US dollar, if we were to follow through this afternoon, we've got several FOMC members speaking this afternoon, and the unemployment claims are coming up in the next 20 minutes. So we'll be watching that carefully as well. If we were to get a breakout on the US dollar and start to make a move up to the 95 zone, that would definitely lend pressure here for gold. So with that said, let's move over to gold. So for those of you who trade gold, gold is very interesting right now. So if we have a look at the swing low since March, we take that up to the swing high we developed right at the end of April here, which was sitting around 1,303 US dollars per ounce. You will note that the 50% retracement level is at 1255. So often when you have a runaway move, you will have a look at the Fibonacci's, you will add those on, previous swing low, most recent swing high if you're trading on a swing trading basis, and you'll plot those on your chart, and you'll be looking for the retracement levels where the market gets to before it finds support. And often the 50% area is quite a key level. You'll often see any particular instrument that you're trading retrace to that level after it's had a breakout, a runaway move, before its next leg up. So we've seen the gold market break down to that level. It's found support at 1255 over Tuesday. It's also, there's a key moving average at that level as well. It followed through yesterday. So we got a breakout to the upside. We closed near the daily highs, and today we've retraced again. So what I would suggest that we need to look at here is the potential. It's not, of course, at that level yet, but the potential for a bull flag formation. There's been several of these on silver over the last 2 or 3 months here, but we're looking for the potential to get a breakout above this resistance zone. So it's essentially developing into a bull flag formation. If we do get a break above 1280 and 1281, I'll be looking for the next retest of the 1300s. So that is a major level I'm looking at for a breakout above the 1280 zone. If we cannot break above that level on gold and it continues to break down here, it does have the potential to start to grind lower. If you have a look at the overall trend channels here, we could just roll over and come back to the 1255 zone. Okay, so we could start to see this just roll over for a retest of 1255. So dependent on data coming out this afternoon, and if we take out yesterday's low on gold here, we could start to drift back down to the lower end of the trend channel, in which case there's still a lot of underlying support. There's still a lot of demand. When gold gets between the 1250 to the 1260 zone, there are a lot of buyers at that zone. You've got some key trend channels, some very significant psychological areas of support, and also key moving averages at that zone as well. So I would anticipate if gold does pull back to that level around the 1250 zone, it is likely to get bought back at that key zone of support. Also, if gold continues to break out, if it breaks above 1280, it's also likely to follow through back up to the 1300s. And if it breaks above 1300s, we could see a similar move to what we saw on soybeans earlier on this week, where you get essentially short covering at that level. You see larger positions start to get filled above the 1300s, particularly if we take out January 2015 high at 1,307 US dollars per ounce. And then we could really expect some good follow through on the gold market. So I'm watching gold very carefully here. I want to see whether we get a retest of the 1250 zone, potentially offering a buying opportunity, or whether we've got a catalyst this afternoon to break above 1280. Now, in terms of having a bullish position on gold right now, we would change that overall sentiment if we were to see gold break and close below the 1240 zone. If it was to continue to sell off, break down, break below that level, and essentially take out this underlying support which has been in play throughout March and April, if we break below that zone, then we're going to start potentially breaking down much lower here for a retest of the 1200s. So just have that on your radar. But for now, looking for supportive bounces at the 1250 zone or a breakout above 1280 to take it up to 1300. Beyond 1300, looking for evidence that will follow through at that zone. Now, where it comes to these bull flag formations, there's been several on silver. So you can actually, again, have a look at that. Just draw it on your silver chart here, where if we were to break above resistance, again, we could get a nice follow through trade to the upside if we've got a catalyst and enough pressure to build up here for a breakout move to the upside. So if you have a look at some of the more recent price structures on silver since it previous corrections here, often you will find it forms one of these bull flag formations. You get lower high in the short term, you get lower highs, lower lows. It breaks down only ultimately to break out of these trend channels and then have its next leg up. We've had several of these on silver over the course of 2016, which I can identify for you, and it looks to be the case that we are developing one again at the moment. So that's what I'm looking at to see if we get some sort of catalyst to again cause another breakout to the upside. So you can see, hopefully you can see that on your screen, the sort of breakouts that we get when we come into these sort of bull flag formations. Now, in terms of retracement levels, again here on silver, you can see that again we've come down, we've retraced to a Fibonacci level, the 23.6 level. So you can just draw that on your chart, the recent swing high in the market this year down to the lows of December, since we've had this runaway move to the upside. And what you will note is that we did find support around a key moving average and the 23.6 retracement, which sits at $17 per ounce here on silver. So I'm looking to see whether this level will hold. Each pullback so far this year on silver has been shallow. Silver overtook gold as the best performing commodity of 2016 over the month of April. So we had a huge inflows, up 14% in 1 month for silver. So this huge move that we saw here to the upside was a huge, incredible gain for silver here. So it is consolidating. It is to be anticipated that we would consolidate, but again, it's been quite shallow so far. Now, if I was looking for a further correction here, what silver would need to do is it would need to break this neckline, which is starting to develop at $16.74 per ounce. So if it was to break below that level, close below that level, yes, there is quite a lot of clean air for in the region of about another dollar move, 100-point move lower there. So if it was to rotate lower, close below the neckline of 1674, yes, then silver is likely heading lower. But for the time being, it's doing well to hold on to these levels. There's still a lot of investment demand for silver right now. We're continuing to see strong inflows into this market. So overall, the price structure is bullish still right now. And moving over now, we'll have a look also at, we'll move over to oil. So oil's looking very interesting. Oil actually yesterday, the oil inventories, they came out very much on the bullish side for oil. So we did see a reduction in the amount of oil inventories, minus 3.41 million versus 0.714, which was forecast. Okay, so we saw a deficit on those oil inventories, and with that we saw a breakout on oil. It's starting to ramp up back towards the upper end of the trend channel. In fact, this is a great example also of a bull flag formation where we've just broken out above resistance. We've come back down towards the lower end of the trend channel and had a nice little pop. So for me right now, I'm watching key levels. I'm very interested to see whether Brent crude oil is going to make a run for it and come up to the $15 per barrel level. So that's really our next target here on oil in the short term, which would be about a $2 move from where we are at the moment. We'd need to just break out above 48 here, follow through this afternoon, and then we could pop up to around the $50 per barrel level for Brent crude oil. So that's what I'm looking at. Certainly short-term momentum is bullish. We could get what is known as a 3 white soldiers pattern, and that could follow through over the course of today. Or we'll come up to major resistance here and we'll stall at this level. There's a lot of consolidation at that level going back towards the back end of 2015. So we'll see how oil bodes over the course of the US session. If we go over to light sweet crude oil also ramping up. It's coming back up for a retest of its 2016 highs here. We've seen some incredible inflows into the crude oil market this year. So crude oil up 70% so far this year off its January lows. It didn't start off the year that well. It broke down significantly at the beginning of the year. But if you actually look at the very lows that we put in at the end of January, from that point onwards to the current prices, we're sitting around 70% to the upside that oil has made since bottoming out at those levels. So it's been an incredible move to the upside. And in terms of the two there, light sweet crude oil and Brent crude oil, you can see as well, I would also be looking for psychological resistance. I'd be looking at the 48 level and also the 50 level above are very key levels of resistance for crude oil. I would say Brent crude oil at the moment has been the first really to get moving here, but I would definitely keep an eye on both of those markets for really the next leg up here if we can continue to follow through over the course of the US session this afternoon. KA7, right, I'll come on to that. Good question. So the question is, I'm currently short gold down to 1,258. Is it wise to close my position until there is confirmed direction. I would suggest it depends on the time frame that you're trading that on and the entry that you got into that position. So you can see on the tighter time frames, we're starting to roll over a bit. You've got a trend channel, which certainly gold is just following in the short term here. So you can see if we were to continue to roll over here and break below yesterday's low, you've got the potential to break down to around the 1258 zone. You have the potential to do that. But also bear in mind that we've come back down to Fibonacci levels, so the 1267 level. We haven't taken out yesterday's low yet. So normally that's a good confirmation signal as well. If you can take out the previous day's low, if gold was to do that, we could get follow through. If it starts to develop a hammer over the course of the US session this afternoon, we see the US dollar index start to roll over and break down, and the overall price structure on the daily chart here on gold starts to develop into a hammer, then yes, I mean, I would certainly exit that position for a sell short. Maybe it depends though on the sort of time frames you trade on. If you're in and out, if you're looking for a short-term day trade, obviously gold has pulled back so far today, but for a swing trade, a longer-term trade, I think you're essentially going against the major trend in the market at the moment. Gold is one of the top 3 performing commodities so far this year. The inflows that we're continuing to see in this market would suggest there's a lot of strong hands still in gold, and downside could be limited. But you might be able to get a short-term profitable trade on in the interim until we see the next leg up here. Yes. Okay. Fantastic. Good. Right. So with that, I don't think there's any more questions. So I will go over. I'll just talk you through some of the top trades that we've had using the Gold and Silver Club signature trading strategy. So there's been some lovely trades this week. So we've been in a longer term trade on soybeans now, taking advantage of this whole breakout to the upside. We've continued to scale in and add positions to this, and we caught a lovely breakout trade following on from the USDA report on Tuesday. So we caught a 680 point profit on that trade as we broke out to 1,090 levels. So that was a really great follow through trade. When you get windfall moves like that, 680 point move to the upside, we saw over the course of that day, the candle moved over 670 points. You want to take some profits off the table. So that was a lovely trading opportunity, bit of a windfall to get that quickly. So it was a lovely profit on that trade. Brent crude oil, we took advantage of a short-term sell opportunity when Brent came overextended to the buy side there, rolled over, and we caught the sell back towards the lower end of the trend channel just for 310 points profit. And we've also caught earlier on in the week a breakdown in palladium as well, following on from non-farm payrolls last week, gave us a couple of signals here for a rotation back towards the lower end of its trend channel as well here when it got overbought for a 370 point profit. So, of course, if you would like access to our exclusive live trading ideas, as you've seen us go through today, the top trades, the trades that we're implementing at the Gold and Silver Club for instant results, there is an opportunity for you to join us. Simply, whether you're a new trader, you're looking to develop a solid understanding of the markets, fast track your results, or if you're an experienced trader, you want to really take your trading to the next level, then the private members live trading room is certainly for you. So I'll talk you through exactly what you get access to as a member of the private members live trading room. It includes exclusive weekly live trading room webinars throughout the week. You get live trade setups ready to implement, real-time trade notifications so you don't miss any profitable trade opportunities. You get the exact details of where we are entering, exiting, and placing our stop loss on each trade. You get live trade support to help you successfully through each trade, customized technical charts, indicators to boost your win rate, and also exclusive access to our proprietary trading research to really give you the ultimate edge in the market, plus of course much more. So to get exclusive access to our private members live trading room, you can get that just via an application to www.jointhegoldensilverclub.com. Once you've completed the application form, we'll get in touch with you ASAP. Okay, so it's www.jointhegoldensilverclub.com. Just fill out the form, very quick to do so. And once you've completed that form, we'll get in touch with you ASAP. And of course, if you have any questions, please just contact us on either our UK office, our US office, our Africa office, or our Asia office. Our UK number is 0207 193 0403. Our US office is +1 646 808 0403. Our Africa office is +27 11 083 8403. And our Asia office is +8521 8191 0403. Okay, great. So with that, I wish you all good trading, guys. Have a fantastic week, and we'll speak to you very soon. And of course, I look forward to working with those of you who will be joining us at the Gold and Silver Club. Thanks, everybody. Bye-bye.